Good afternoon. This is Clark Neighbors with BIS Commodities, Cedar Rapids, Iowa, for the market update on June 28th, last day of June, last day of the quarter. Very interesting market dynamics today with the quarterly stocks and planted acreage report, which I'll touch on in a second. Keep in mind next Thursday, the 4th of July holiday, there'll be no markets on that particular day. The excitement today arose from the 11 o'clock report giving us an intention or update on planted acres and also the quarterly grain stocks. Planted acres on corn came in at 97.4 million acres. Trade was looking for 95.4, and this is versus a March number of 97.3. So we actually were almost 2 million acres above what the average trade guess was looking for, and slightly higher than the March report. Now, in comparison to a year ago, is 97.1 million acres. That is the number that got the market rolling to the downside today, and I'll spend a little more time on that in a second. Bean acres came in at 77.7 million acres. Trade was looking for 78, so slightly below what the trade was looking for. In comparison to the March report at 77.1, and a year ago at 77.2. So not any major surprises on the bean numbers, and I'll touch base on that in a second also. Stocks, and keep in mind these are the quarterly stocks as of June 1st with 3 months left to go in the marketing year. Corn stocks at 2.76 billion bushels versus 2.85 as an average trade guess. A year ago, it was 3.15 billion bushel, so we're looking at almost 400 million less bushels of corn today versus a year ago. Beans, and this is the one to watch, 435 million bushel. Trade was looking for 441. A year ago, the bean number was 667. Wheat came in at 718 versus an average trade guess of 750, quite a bit below what the trade was looking for, and a year ago at 743. So in a nutshell, the report, or the initial knee-jerk reaction to the report, was the stocks were friendly to slightly bullish, but the acreage number, especially the corn, got the market going to the downside. Now, a lot of questions why the corn number is that large. Keep in mind this is an intention number. In early June, the USDA probably at that time did not have sufficient evidence or information to look at the slow spring with prevent plants and things like that. So that's the number we're going to have to go with at this time. Now, the USDA also did announce that in July they will do a update estimate in 14 states on soybeans. So that may come out in the August supply and demand update. So as far as the corn acres at 97.4, keep in mind that's a planted acreage intention. What the market's really going to want to look for as you go down the road is the actual harvested acres. So for example, if we have 2 million acres that were in prevent plan or for some reason did not get planted, that number could probably come off of the harvested number, which in that regard would still get you back in line with where those numbers are. But keep in mind that harvested acreage number was not in today's numbers as far as the trade was looking at. Now today also, because of the tight stocks and what was going on with new crop, we had a very dynamic move on spreads. July SEP hit $1.35 premium July, which is a new contract high. July D's also the new contract high to $1.63 on the close. This is close to the all-time high in 1996, was up around $1.80, I believe. July, August soybeans at $1.36, new contract high in July. November soybeans at an all-time high of $3. I repeat, $3.13. So when you look at these spreads, if you look at just a breakdown, and keep in mind July's in deliveries as of today with first notice day, for the week, July corn was up 18 cents. At the same time for this week, December corn down 45. On the soybeans, you're 71 cents higher than July during the past week. At the same time, November beans are down 20. One final note to kick back on the planted acres. One thing of note when you look at where the acres were increased, was out west mainly versus a year ago, and also versus the March intention. Your biggest increase in acres versus a year ago was North Dakota, Nebraska, and Texas, and along with Nebraska and Texas being a big jump from the March report. Keep in mind that part of the growing belt is where we've seen a severe drought a year ago, and also had dry conditions in March when the initial tensions came out. So that's where we saw the increase in acres. The decrease was right in the key part of the Corn Belt, mainly Iowa, Illinois, and Indiana. So it'll be interesting to watch how the market interprets where the acres are and where they aren't. And again, that harvested acres on corn is going to be the key issue. Where you did see that decrease in corn harvested acres, you also saw a build in bean acres, especially in those key middle states of the Midwest of Iowa, Illinois, and Indiana. Getting back to the spreads, because of the tightness of the stocks, because of strong basis, and because of lack of movement, the spreads are going to be interesting to watch, and the dynamics. Now keep in mind we are in deliveries against the July, so there's going to be more emphasis on what the August is doing as far as the soybeans are concerned, and the SEP's doing in the corn in regards to these spreads. Keep in mind late in today's session also, with this break on the new crop corn, we made new contract lows just by a small amount here late in the session. In the modified session after the close, corn did test 506 on the D's corn. A year ago at this time, right on the last day of June, because of the drought a year ago, we were 640 and heading higher. I believe we were up around $7 on the 4th of July, so the dynamics are far different than a year ago. Keep in mind, a December contract in corn is not traded below, or I should say closed below, $5 since October of 2010, so it's been quite some time. November beans, you saw pressure today in the new crop also. That 1250 area where we're hovering near reaches some lows that we saw just late in May, here 30 some odd days ago. But keep in mind the contract low in beans is well over $1 below where we are right now. So the bean market seems to have a little more dynamic to it right now versus the corn, both on the old crop and the new crop. I think that bears watching with these spreads, bears watching versus basis. Now we are seeing some relaxation or some backing off in corn basis over the last few days. I think it sounds like we saw some movement in parts of the Midwest the last 3 or 4 days as we approach the report. We still feel here in the office there is a supply of corn that is available. The problem is getting that supply of corn to come out, because most of that supply of corn is still in the farmer's hands, and that's why it's going to be interesting to watch the flat price, watch basis as time wears on. Also keep in mind, in visiting with some commercial folks this week, new crop ownership, especially on especially on corn, is very, very limited. Some say they have bought maybe 20% of the normal new crop bushels as of this time frame versus normal, which is kind of interesting with a market drifting lower here of late. Crop conditions will come out this upcoming Monday. The interesting thing there to watch will be how the crop conditions compare versus a year ago. A year ago, those crop conditions were falling aggressively to the downside on a week-to-week basis. Keep in mind, you don't want to compare this year necessarily on a week-to-week basis versus last year. You more look at the trend. Keep in mind, crop conditions are nothing more than a beauty contest. Over the past week, personally, I've seen a fair amount of the corn from Omaha to Chicago. The crop, as you move east, seems to have a little more growth and a little more consistency, or average height, if you will, especially in the northern part of Illinois and extreme eastern Iowa. As you move west, and most of this was along I-80 for what it's worth, you see a little more spotty, ragged type conditions, but as a whole, the corn especially looks to be improving with the weather. Yes, there are still some very significant wet spots in some parts of the Midwest, but those significant wet areas seem to be holding in the same areas, and that area would be some, north central, northeast Iowa, southeast Minnesota, and then in western or parts of central Wisconsin. So those are going to be areas to watch. That's also a key area where we see a fair amount of old crop stocks. Keep in mind the stocks in the northern part of the Corn Belt are still very key as far as this old crop is concerned. You have greater amount of corn stocks in Minnesota right now, according to the stocks report today, than you do in Illinois. You have more stocks in the northwestern Corn Belt, which what I refer to as Minnesota, Wisconsin, and Dakotas. You have more stocks in those areas than you do in Illinois, Indiana, and Ohio. So the stocks still have a very much northwest bias. The areas of the crop that are struggling may have somewhat of a northwest bias, so it'll be interesting to see how the attitude the farmer is in those areas because of the poor crops. Producers, after the recent break and what's going on, we're at a time of year where rallies are going to be key to sell, assuming they come along. Typically now we're looking at having to see some sort of issue in weather to create that. Some in the trade we're talking today that a year ago on the 4th of July it was 105 to 107 degrees in St. Louis. This year on the 4th of July is going to be in the low 80s. So the comparison there will be different. But rallies are to be sold. Very little new crop, as I mentioned, has been sold. Do the same thing with that intention as far as producers are concerned. So in a nutshell, the report today was a little surprising from a planted acreage standpoint. We felt you would see more go, or the market would be driven more by the stocks. Obviously it wasn't. The spreads were driven by the stocks, but not the board reaction. Going forward, there's two things to watch. One is weather, and two, and probably more importantly, the old crop stocks and how that plays out, how the spreads play out, and how this basis plays out. With that, we wish everyone a happy 4th of July. And if you have any questions, feel free to call us at BIS Commodities in Cedar Rapids. Phone number is 800-373-2525, or visit us on biscommodities.com. With that, everyone have a great weekend.